Right, let's welcome on board Dipan Mehta as well and chat about what he's making of the market right now. Dipan, once again, a very short-lived correction, Monday meltdown, and now we're practically to where we left it off. How is it that you've dealt with the past 2 days?
Yeah, good afternoon, and thank you for having me on your show. Nothing, just stay put. I think, we have seen such down days being immediately backed by ferocious buying as we have seen today. But let's see, I think, we are in a wait and watch mode at this point of time, sitting on a little bit of cash, expecting a correction, as are so many other professional investors. And we don't know whether this particular correction is over and done with or that it can deepen further because so long as the market doesn't create a fresh new high, the risk always remains that this correction can particularly deepen. So only time will tell, but I think a lot depends upon global markets and FI flows as well. But for the timing, I think as an investor, it's best to stay put and watch out and play out the earning season and see what the numbers are coming and which are the good ideas which are coming through and which are the misses where one can exit out of them.
Fair enough. Need to stick to quality and keep on doing a bottoms-up analysis. That's the nature of the market right now. Just take stock of what's happening to Jio Financial Services while we're tracking Reliance Industries on account of the annual report comments coming in, and that stock hasn't reacted. Jio Financial Services actually has. That stock is up 7% right now, 8% as we speak. Dipan, you track this, stock and this group very closely with respect to what's happening to Reliance, the commentary coming in from annual report, and Jio Financial Services. When the stock listed of Jio Financial Services, everybody was saying that it doesn't have a business, not really makes sense to own it right now, but the stock has jumped up materially from there.
Yeah, that's right. And I was also in the camp which said that, we're not that positive on Jio Finance at this point of time because building such businesses at scale requires time, requires to build a solid team. And for investors to get confidence, it requires the NBFC to go through an actual down cycle, or I would say up cycle in the NPAs and see how they've actually performed and how their risk management systems how resilient the risk management systems are. So those have not been tested as yet. So therefore, I just want to wait and watch on Jio Finance. It's easy in India, it's easy to scale up a NBFC business, but the problems start 2, 3 years down the line when the corrections start to falter and NPAs start to spike. Whether that happens in Jio Finance, only time will tell. I'm sure they have got robust risk management system. But even some of the bigger groups, like look at the way M&M Finance has played out in terms of when the downturn took place in the NBFC industry and when NPA started to spike up, that company really suffered. So it's not just the management. A lot of other factors also come into play. So from that point of view, I think it's better to be a bit cautious and go for the tried and tested players like say Bajaj Finance or Chola Investment, which have done exceptionally well. I thought even Sundaram Finance numbers were pretty decent.
Right, interesting. Where else, Dipan, if at all, have you bought in afresh in the market? I mean, a lot of sector churn clearly at play. Banks made an attempt, fell back after their numbers. Pharma clearly seems to be a decisive winner looking at the earnings of a few of them. And then, of course, sporadically, FMCG as well has been trying to hold out.
No, I'm not buying anything just now. As I said, right now it makes sense to be a little bit in cash in your portfolio if there's a correction, and there has to be a correction. Right from 2022, post-COVID, we haven't had a serious correction. By serious, I mean a 10% type of a correction, or maybe even a testing of the 200-day moving average. And at some point of time, it will happen. One can't say how and why and when, but that's a good entry opportunity. For right now, I think if you're 70, 80% invested, you're fine. The cash which you hold in your portfolio, 15, 20%, 10% is strategic. It will enable you to buy into good quality businesses when there's a correction, because more often than not, investors do not have cash when there's a correction. When a correction does come, the real quality businesses can drop by 20, 30% also. I know you may find it surprising because we haven't seen it, but I've been in the market for 30 years. And I know that even in a bull market, you could have quite a deep correction. And that's what we are waiting for at this point of time.
Waiting for that correction to get done. In the meantime, quickly, Aditya, before we let you go, share with us your BTSC trades.
So I like Sun Pharma right now, which is a bullish candidate. This could be bought at 1734. Stop loss is 1700 and target is 1770 to 1800. Second one is Coal India. This one is also outperforming the market and there's good strength in this counter. So this could be bought at 530.20. 505 is the stop loss and target is 560 to 600.
Any BTST trades you'd recommend?
So yeah, a couple of buy calls, and my focus would be on ABB. That's a chart which is looking attractive, formed a double bottom today at 7,700 mark, which has been a key support. So keeping a stop loss of 77.50, would recommend a buy with a target of 81.50. And Dr. Reddy is the other stock which I'm expecting in terms of a breakout. The stock has is coming out of a consolidative range at the higher end of the price trajectory, and we've seen pharma stocks doing fairly well. So expecting a breakout for Dr. Reddy, 71.50 as a target, stop loss at 6,800.
Okay, so those are the BTSC trades coming in from our charters at the moment. But let me also look at what the comment was from Prabal Sen regarding ONGC and Oil India, because both of these stocks are doing very well. In fact, ONGC, me and Ajay were discussing, is sitting at a 14-year high level, and it just continues to gain ground. And the brokerages, as Aisha was talking about, are fairly sanguine still. Let's hear out what Prabal had to say about a couple of these OMCs.
Directionally, realizations will look up. Production seems to be reversing its long-term trend of steady decline. And of course, there is obviously some optimism that subsidiaries like HPCL and even OVL can actually continue to add to consolidated earnings. So there's a whole lot of things that are actually now coming together. The street seems to have woken up and developed this newfound belief in their production levels, but it's not something that they have not stated earlier. The asset has already started producing. It's been probably about a couple of quarters that it is steadily delivering 10 to 12,000 barrels a day of oil for the, and if you take into account the total production of gas from cluster 1 and cluster 2 in the KG98 block, it is at about 1.5 MMSCMD of gas. So the confidence that is there in terms of delivery of the exit rates that they have spoken about, of getting to around 40,000 barrels of oil per day and getting to about 6 to 7 MMSCMD by this year, and then reaching peak production of around 9 to 10 MMSCMD by next year. I think that confidence does come through a little bit, because there has been a delay in ramp up, but there's no significant technical disappointments from the asset. And I think that is very important.
Well, other than the markets, lots happening on the corporate stable as well. And the much-awaited Tata Curve SUV Coupe has been launched with an introductory starting price of 17.49 lakh rupees ex-showroom. It is the first ever coupe SUV from the manufacturer's stable and will go up against the mid-size SUVs like Hyundai Creta, MG ZS EV, Mahindra XUV 400. So let me take it across to my colleague Srishti and get in some more details on this brand new launch from the Tata Motors stable.
And this is Tata Motors' latest offering, because today Tata Motors has launched its Tata Curve, that is SUV Coupe, one of its kind, because very limited in competition. And what we're going to see is an interesting offering by Tata Motors. It gives you a mixed feel of both SUVs and sedan, and that's what we call as a coupe category. It actually bends down near its roof rails, and this product, what you're going to see, is very attractively priced. The price range starts from 17.5 lakhs and goes up to 21.99 lakhs. It's actually come out with two battery pack options, 45 and 55 kilowatt hours, and the range is also quite good, because though the certified range is actually over 500 kilometers, but just to give you a realistic idea, the company did say that between 400 and 430 kilometers in a single charge is what you can expect from Tata Curve SUV. If we talk about some of the other details, then the company did say that from 0 to 100 kilometers per hour, this car is one of the fastest in the category, which can be there in less than 9 seconds. And other than that, they also do say that for today, they have launched their EV variant, but in the second half, be ready to watch out for the ICE variants as well. So this is Tata Motors' latest offering, one of its kind, as well as very limited in competition, attractively priced, and the bookings will open on 12th of August.
Okay, point taken. So that's the latest from the stable of Tatas. Dipan, if you're still with us, a lot of launches lined up earlier today. Shrishti was telling us that Bajaj Auto might come up with a couple more just around the festive season. Could that lead to a re-rating of sorts for the entire auto sector?
No, I think they are, in a way, I would say, impacted by the high base of the last 2, 3 years. And no doubt, I think monsoons have been good, so that should benefit rural market and all the sales which go to the rural market. But I would be a bit cautious to neutral on automobile at this point of time. There are telltale signs that inventory is building up, discounts are going up, and no doubt new models may drive volumes, but I don't think it's enough this time round. So I feel it's better to just be a little bit cautious as far as automobiles are concerned. We have a new IPO opening that is already open, Ola Electric, and I'm eagerly awaiting its listing. Let's see how that plays out. Maybe a couple of months down the line, it could be an interesting investment idea as well, considering that the future of the automobile industry is in EVs. And in India, I think it's the scooters which will take to EV conversion very, very fast. And Ola, being the market leader, can really surprise a lot of the players over there. So it's a company really worth watching. And we'll be tracking how much progress it makes and trying to figure out a good point where the risk
Thank you,
return
Dipan,
profile
as well
plays
as
out.
Kunal for joining us on the show today.
If you like this video, then like, share and subscribe to ET Now.